Good morning, everybody. Coinbase has received a Wells notice. A Wells notice is a precursor to actually being sued by the SEC. The SEC is suing Coinbase for several different things, or warning that they're going to sue, or in communication with Coinbase for several different things. One of them is their Earn product, staking, so on and so forth. Earlier this year, Coinbase had a $100 million settlement with New York, and this sets up a very, very nasty precursor for cryptocurrency as a whole. Coinbase said that they met with the SEC over 30 times in the last 9 months, but they said that they're the ones that are doing all the talking. Coinbase meets with them, they ask them for clear and coherent regulation, and it never happens. Also, Coinbase wanted to launch a product called Lend, and the SEC shut that down right away. This happened last year. They said that if you open this, we're going to sue you. It's like before they even do something, guilty before anything. And it's freaking crazy. So right now I'm going to play you a clip of Staci Warden. About a month ago, she spoke to CoinDesk, and she's going to address staking. She's going to address the $30 million settlement with Kraken. And yeah, it's going to be very interesting to hear what she has to say specifically for Algorand, but not just Algorand, also in general, the whole crypto market. What's happening right now is a complete 100% attack on cryptocurrency. I've been saying this for the longest time, and I mean, it's clear. It's clear between the attack on crypto banks, the attack on our largest United States regulated crypto exchange. Is just disgusting what's happening, and it's like they're hell-bent in destroying this industry of crypto, but it's not going to get destroyed. It's just going to move more to DeFi, decentralized finance, and it's going to move out of the country. Now, for anybody that's saying, yes, DeFi, most of it's going to go out of the country. Most people don't want to do DeFi. They just want to buy and hodl as an investment for the long term, or send funds from point A to point B as a point of transfer, as a point of buying something. This is a really, really good interview. It's 11 minutes long, and Staci Warden not only touches on Algorand, but she also touches on cryptocurrency in general. Please enjoy. And as always, don't forget, keep it clean in between, because hygiene is very important.
Can crypto survive an SEC crackdown on staking? Last Wednesday, Coinbase CEO Brian Armstrong went public with rumors about the U.S. Securities and Exchange Commission working to get rid of retail-focused crypto staking offerings. Joining us to discuss this and much more is Algorand Foundation CEO Staci Warden. Staci, great to have you this morning.
Hi, Christine.
Now, you can actively stake Algorand on many major exchanges like Binance, Coinbase, Ledger Wallet. Maybe you can weigh in on this staking controversy.
Well, you know, the staking controversy with Kraken has really got the crypto community pretty agitated, because staking is a fundamental part of how these blockchain protocols work, the proof of stake blockchain protocols. So if you are a node operator, you have a responsibility to append blocks to the blockchain, and you put up money to make sure that you don't do anything nefarious, so that if you do something nefarious, you can lose your money. And so it's really core to the security and the reliability of a blockchain protocol, a proof of stake blockchain protocol. Now, if you take a protocol like Ethereum, or another good example is Solana, those node operators require enterprise grade nodes. And so your average person can't run one of those nodes. And so what institutions like Coinbase or Kraken offer to retail investors is the ability to stake to those nodes and take a little piece of the money that they earn from appending the block. And it's quite important. It's a really fundamentally important component of proof of stake protocols. Now, I say this with some irony, because Algorand does not actually use a staking protocol like that. It is the vision and the point for our founder, Sylvia McCauley, that everybody on the protocol should be able to participate in the consensus mechanism of the protocol. So on Algorand, for example, you don't need to use an enterprise grade node. You can participate in consensus from a high-end laptop, actually. So that's why we're called a pure proof of stake protocol. But more generally speaking, yeah, staking is very, very important fundamentally to blockchains.
Nonetheless, it seems that when it seems that the issue, and this is something I brought up in the previous blog here segment, is that the issue seems to be that they were essentially functioning, doing a variable for fixed swap. And in other words, that they weren't necessarily passing on the risk to the to the customers. They were taking on the risk in exchange for paying out a fixed rate. They were taking in the variable rewards. So do you think, though, that this is sort of making it more of a pure play from the SEC? In other words, the SEC kind of appears to want retail users to have more of that, take on some of that risk, and rather than leaving it to the centralized exchanges to do. Don't you think that that's almost kind of back to what it's all about, to the essence of what crypto is about? Isn't it more of a old school mentality that the SEC wants to impose on everyone versus this sort of centralized finance, old financial institution kind of thought that the centralized exchanges are doing?
Yeah, I mean, I think that's an extremely good point. And you can see the rally in protocols like Lido, for example, right? They have that, investors are having that view. And that's why you're seeing a rally in protocols like that are of a decentralized staking arena. I think the arguments to support the SEC move here would be twofold. And the first is the one that you just said, right? And I'm not an expert on how the Kraken protocol works, and I, of course, wouldn't opine on that. But the idea is, yes, that it wasn't a pass-through. And if it was more of a pass-through profit-taking from the underlying protocols, then it is being said that maybe they wouldn't have gotten in trouble. Again, I don't know, but that is, as you point out, what is being said. And, secondly, I think it's this point of, is it going to be good for decentralized protocols more broadly, as again, you mentioned. And, the idea here is that, the argument that the SEC could make here is like, look, you're an exchange. You happen to be an exchange for digital assets, but otherwise you're an exchange. Why shouldn't we regulate you just like all of the other exchanges in our jurisdiction? Just the fact that you have digital assets as opposed to equities does not make you different in any way. And I think that's the argument that they would also use to now, for me, I think the broader point here is that it's not the regulation so much, it's the way that regulation is taking place. This regulation by enforcement, the lack of regulatory clarity. I mean, Jesse Powell, Kraken, and Coinbase, they are trying to do the right thing. And with some better regulatory clarity up front, they would have, in my view, probably done exactly what the SEC needed them to do, but they're just not being told. They're being punished as opposed to given guidance. And I think the ecosystem more broadly is getting a little, they're unhappy about that.
Well, Coinbase CEO Brian Armstrong had tweeted in part that it would be a terrible path for the U.S. if the SEC banned staking for retail investors. And I wonder, do you think this latest SEC action could lead to a wider crackdown of the industry? But I say that knowing that Gary Gensler was at MIT with Silvio Micali, he must understand Algorand and how it works. So I don't know, but he must, I hope he has an understanding of, the pure staking versus going through a protocol and a centralized exchange.
Right. If he ever wants to discuss with me, I'd be happy to explain it to him if he needed any refresher.
But okay. But are you concerned that this SEC action, going after staking with Kraken could bleed into the wider industry?
I think both of these things are worth paying attention to, both the Paxos and the staking, because these are very important primitives to crypto overall, right? You need stable coins in order to move from protocol to protocol. Otherwise, you've got to talk to the banking sector every time you want to move from protocol to protocol. And staking, as you guys have noted, is a very, it's widespread. It's a retail investors like staking. And some certain proof of stake protocols do need staking to manage the security of the blockchain. Now, I think an interesting question is going to be whether that staking in decentralized crypto is going to be at risk. And, honestly, I just don't have any idea about that. I'm not a lawyer and I wouldn't predict, but that will be, if that was true, that would be bad for proof of stake protocols for sure.
All right, just switching gears here. With the crypto winter happening, what is the Algorand Foundation looking at? How has it been impacted? And going forward, what are you guys building? What are you guys interested in terms of the future of Algorand and the crypto industry?
Yeah, I mean, well, given that it's crypto winter, I just spent the last week someplace warm. We went to India, which is, as you know, projected to be the fastest growing major economy in the world. India has, an average age of 28, 29 years. This is prime productivity working years. So I think the next decade is going to be about, in large part, India. So we were there. We hired a very senior person to look after the country for us, and we were there signing a number of important partnerships there. We're doing partnerships in education with a couple of different universities. We worked with the Self-Employed Women's Association, which is one of the largest impact groups in the world. It's just celebrated its 50th year anniversary. And they have now partnered with the Clinton Initiative to do a climate resilience fund for women. We are the technical partner for that fund, so all kinds of cool things could be happening there. Yes, that's me with Hillary Clinton. Very excited. And India also will be the host of the G20 this year. So we were talking about, again, how we can offer technical assistance for their G20 process. And then we support one of the Envision racing car for the Formula E, which, by the way, was placed ninth and then came in second. So really great time at the Formula E. And we are last and certainly not least doing a big partnership with the T-Hub, Telangana Innovation Hub in India. And it's one, they have big partnerships with like Microsoft and Meta, but we are their very first blockchain partnership. So we were there kicking off that partnership. I held a women's breakfast, as I do wherever I go. And it was really a terrific trip. So we are focused, as we always are, on real world use cases, impact and inclusion. And this was just another example of that. But we're excited about the India initiative for sure.
And can you explain a little bit more about the climate fund here that you're involved with and as a tech partner? What exactly do you do?
Yeah, sure. So this organization is really incredible. They started, imagine this, 50 years ago in India, self-employed women. These are like market stall women that are working in the salt flats, women that are carrying things on their head back and forth. And they lobbied, again, in the 1960s for some kind of trade union representation, and they won. And a very nice story about how they brought that about. But 50 years later, they are now celebrating their 50th year anniversary. Secretary Clinton, when she was Secretary of State, got to know this organization, was always very supportive of it. So they came with this idea to do a climate resilience fund for these women. Now, these women, as you can imagine, there's all kinds of issues that are very good for a Web3 solution. So, for example, bringing them carbon credits on the blockchain at a micro scale is something that we talk to them about. Marshalling identity for credit access as part of this fund is something else that we're talking to them about. Setting up a DAO structure so they could participate in the fund, not just as recipients, but maybe as investors. So all kinds of things like this. Web3 is very much about empowering the little guy, the little gal in this instance. And so we are just trying. It's early days, but we're exploring all kinds of things like that for them. And Algorand is quite good for that, right? Because they're not going to do this on a blockchain that has a large carbon footprint. We have a negative. We use the energy of a small neighborhood, but we buy offsets to make sure that we're always carbon negative. And our transaction fees are sub-penny. So these are the kinds of things that are very important when you try to get this bottom of the pyramid type impact stuff.
Fascinating. All right, Staci, we're out of time, unfortunately, but thank you so much for joining us and contributing your insights. That was Algorand Foundation CEO, Staci Warden.